A new era of engagement, China's investment foray into the UK. The UK, a nation renowned for its historical economic prowess, found itself at the cusp of a new era of engagement with the rise of China. Chinese investments flowed into key sectors of the UK economy, heralding what many perceived as a golden age of collaboration. Among these sectors, nuclear power, infrastructure and technology emerged as prime destinations for Chinese capital. Major projects like the Hinkley Point C nuclear power station became emblematic of this burgeoning partnership, with Chinese firms taking significant stakes and pledging billions of pounds in investment. Beyond nuclear power, China's investment appetite extended to the UK's infrastructure sector. From transportation networks to renewable energy projects, Chinese companies participated in a wide range of initiatives. The allure of investing in a developed economy with established legal frameworks and a skilled workforce proved irresistible. Furthermore, the UK's burgeoning technology sector attracted considerable attention from Chinese investors. Investments poured into artificial intelligence, fintech and other cutting-edge technologies, fostering collaboration and knowledge transfer between the two nations. The rising tide of discord, geopolitical tensions cast a shadow. As China's economic footprint in the UK grew, so too did the complexities of the bilateral relationship. Human rights concerns, particularly regarding China's policies in Xinjiang and Hong Kong, emerged as major points of contention. The UK, along with other Western nations, expressed growing unease over China's human rights record, leading to diplomatic friction and public pressure to re-evaluate the relationship. Adding to the strain were concerns over security threats, particularly in the realm of technology and data security. The UK government, increasingly wary of potential espionage and intellectual property theft, tightened scrutiny on Chinese investments in sensitive sectors. The debate over Huawei's involvement in the UK's 5G network became a lightning rod for these concerns, highlighting the delicate balancing act between economic interests and national security. Moreover, the UK's decision to leave the European Union, commonly known as Brexit, further complicated relations with China. The UK government faced pressure from various quarters to adopt a more assertive stance towards China, particularly on issues like trade practices and market access. The era of unbridled economic engagement gave way to a more cautious and pragmatic approach. Fortress Britain, navigating the labyrinth of new investment regulations. In response to mounting geopolitical tensions and security concerns, the UK government undertook a series of measures to tighten regulations on foreign investments, particularly those originating from China. The introduction of the National Security and Investment Act 2021 marked a significant shift in the UK's approach to foreign investment screening. The new law granted the government sweeping powers to scrutinise and potentially block foreign investments in critical sectors, including energy, infrastructure and technology. The legislation's broad scope and emphasis on national security reflected the UK's growing unease about potential risks associated with Chinese investments. However, the move also raised concerns among some businesses and investors who worried that the heightened scrutiny could deter foreign investment and hinder economic growth. Navigating the labyrinth of new investment regulations became increasingly complex for Chinese companies seeking to do business in the UK. The government's enhanced screening process, while intended to safeguard national interests, also introduced uncertainty and delays. The tightening of investment regulations had a chilling effect on Chinese investment in the UK. The dragons slow down economic headwinds and shifting priorities in China. While geopolitical tensions and regulatory changes in the UK played a role in the shifting investment landscape, China's own economic trajectory also contributed to the dynamic. After decades of rapid economic growth, China began to experience a slowdown, prompting the Chinese government to reassess its investment priorities and focus on domestic challenges. The Chinese government implemented structural reforms aimed at addressing imbalances in the economy, such as excessive debt levels and overcapacity in certain industries. This shift in economic priorities had implications for China's outbound investment strategy. The Chinese government encouraged companies to prioritize investments that aligned with national development goals, such as securing access to natural resources, acquiring advanced technologies, and expanding into new markets. The combination of economic headwinds and policy changes contributed to a decline in China's global outbound investment, including in the UK. Section 5. A ripple effect, project delays and funding gaps emerge in the UK. The confluence of geopolitical tensions, regulatory changes in the UK, and China's evolving economic priorities had a tangible impact on the UK economy. Projects that were once hailed as symbols of UK-China collaboration faced delays, funding gaps emerged, and the post-Brexit landscape presented new challenges. One of the most high-profile examples of project delays was the Hinkley Point C nuclear power station. The project, which involved significant Chinese investment, faced numerous setbacks, including cost overruns, construction delays, and political controversies. Beyond Hinkley Point C, other infrastructure projects also experienced delays and funding challenges. The UK's decision to reassess its relationship with China, coupled with China's own economic slowdown, led to a decline in Chinese investment in sectors like transportation and renewable energy. The funding gaps created by reduced Chinese investment posed challenges for the UK government, which was already grappling with the economic fallout from Brexit. The UK's ability to attract investment from other sources became crucial for its economic recovery and future growth prospects. Section 6. Seeking new shores, the quest for alternative investors. Faced with declining Chinese investment, the UK embarked on a quest to secure alternative sources of funding for its ambitious infrastructure plans and to foster economic partnerships with other nations. The United States, Japan, and European countries emerged as potential candidates, each with their own strengths and limitations as investors. The United States, with its deep capital markets and technological prowess, presented itself as a natural partner for the UK. The two countries shared a long history of economic and political ties, and the UK government sought to deepen these relations in the post-Brexit era. However, the US government's own infrastructure spending priorities and the potential for trade disputes posed challenges for UK-US collaboration. Japan, another economic powerhouse with a strong track record of investing in infrastructure, also emerged as a potential investor. Japanese companies had previously invested in UK projects, and the Japanese government expressed interest in expanding economic ties with the UK. However, Japan's aging population and slow economic growth raised questions about its long-term investment capacity. The UK's quest for alternative investors highlighted the importance of diversifying its economic partnerships and reducing its reliance on any single country, including China. Section 7. The Middle Kingdom turns inward, China's pivot to domestic growth. As geopolitical tensions simmered and economic headwinds mounted, China embarked on a strategic pivot towards domestic development, prioritizing internal stability, technological self-reliance, and stronger ties with emerging markets. Recognizing the vulnerabilities associated with excessive reliance on foreign technologies and markets, the Chinese government launched ambitious initiatives aimed at fostering indigenous innovation and achieving technological self-sufficiency. The Made in China 2025 plan, unveiled in 2015, outlined a roadmap for transforming China into a global manufacturing powerhouse with a focus on advanced technologies such as artificial intelligence, robotics, and new energy vehicles. This inward turn was further reinforced by the Belt and Road Initiative, a massive infrastructure development program launched by China in 2013. By investing heavily in infrastructure projects in these regions, China sought to secure access to resources, expand its economic influence, and establish new trade routes that bypass traditional Western-dominated shipping lanes. This shift had implications for countries like the UK, which had previously benefited from China's outbound investment spree, but now faced a more discerning and strategic Chinese investor. Section 8. A New World Order, China's growing influence in emerging markets. As China's economic might grew, its influence extended beyond its borders, reshaping the global landscape and forging a new world order characterized by multipolarity and the rise of emerging markets. China's growing footprint in Africa, Latin America, and Southeast Asia challenged the traditional dominance of Western powers, offering alternative models of development and fostering closer economic and political ties. In Africa, China emerged as a major investor in infrastructure, natural resources, and manufacturing. Chinese companies poured billions of dollars into building roads, railways, ports, and power plants across the continent, filling a critical infrastructure gap and facilitating economic growth. Similarly, in Latin America, China's presence grew significantly. Chinese companies invested heavily in mining, energy, and agriculture, attracted by the region's vast natural resources and growing consumer markets. Southeast Asia, with its strategic location and burgeoning economies, became another focal point for China's outward expansion. China's Belt and Road Initiative made significant inroads in the region, with numerous infrastructure projects underway, including high-speed railways, ports, and special economic zones. China's growing influence in emerging markets signaled a shift in the global balance of power.